So now let's first talk about what is considered an inflow and what's considered an outflow on our cash flow so we can have an idea of what things we are including. So when we start thinking about the inflows, a lot of the things you already have been including on other statements, you're going to get the idea of what we should have included here. So first of all, our major area of inflows for us is the things that we sell that we've produced. So all the farm products that we have sold or that we have for sales, or the farm generated income, we want to estimate what that is. Okay? So remember, I'm doing this as a forward planning tool ahead of time. So what that means is I'm going to go over to my enterprise budget. Let's say I have 2 crops and some cattle. Okay? So I have corn and wheat and cows. Okay? So what I'm going to do is I'm going to go to my corn enterprise budget and I'm going to estimate how many dollars of corn sales I anticipate for the next upcoming year and approximately when I think that will happen. Well, if my corn enterprise budget says that I'm going to generate $700 worth of corn income, just as an example, and I have 100 acres of that, okay, then what I'm going to do is I'm going to take that $700 per acre times 100 and I'm going to have $70,000 worth of corn sales, and I'm going to put those corn sales, if I assume that I'm going to have that in November, let's suggest, then I'm going to put that in my cash flow as an inflow item and call it corn sales, and I'm going to put that $70,000 in November. So I estimate each one of the things I think I'll sell. I estimate each one of the farm activities I think I'm going to generate income on, and those are my inflows. But I'm also going to do other things during the course of the year. Maybe I'm going to sell a package of my breeding cows, not as cull cows, but I'm just going to sell a package to kind of maybe reduce my herd numbers a little bit. And so I sell a group of breeding cows. Maybe that's a capital sale. Maybe I have 2 pieces of equipment that I've decided that I want to go ahead and sell. So I might have some capital sales that I'm actually going to now show the true income I receive on, that I'm expecting to receive on it. I'm not going to compare it to the book value. I'm not going to compare it to depreciation and cost. I'm just going to put in how much I think I'm selling it for, because that's going to be cash for this year. So I'm going to list everything I think that's going to occur, and then I'm going to think about anything that's non-farm. So if I have my farming operation and one of the spouses, husband or wife, works off the farm and brings in off-farm income, I'm going to include that in the cash inflows. So if there's a salary coming in per month, let's say it's $3,000 per month, just as an example. So there's $3,000 extra dollars coming in every month. Then I would include that in the inflows along with all the farm products and the capital sales, because that's part of the money coming into my operation. And lastly, then, if I borrow some money, that's inflows to the operation too, because that's outside money coming in and I get to use that. The outflows are just the opposite, but it's still all the things I do from a cash standpoint. So I'm going to have my general things that I already had on my enterprise budget. Okay, I'm going to have all the farm operating expenses, everything that I truly spend money for. So if earlier I put some opportunity costs on there, maybe I put an opportunity cost for labor on there, and that's really my own labor, but I'm not paying myself for that, then that's not going to go on the cash flow because it's not a cash paid item. On the other hand, there's going to be most of our farm operating expenses that were on our enterprise budget that are cash items. So if we think about the corn enterprise, and we had chemicals and fertilizer and seed and fuel and repairs and all those different things we listed, those things are going to be ones that are included, and I'm going to take that as a total for the whole year. If I estimated one of those expenses to be $30 per acre, and I've got 100 acres of that, then I need to put in $3,000 for that expense. Okay, and then decide when do I think that's going to happen. Maybe it's happening a little bit in 4 different months. So I spread it out. My capital purchase is anything that new that I purchased that's a capital item. So those items are the same way. I now get to include the full purchase price. If I know next year I'm purchasing a new sprinkler and I'm going to put in a new sprinkler system, then I need to put that into my cash flow and see if it's going to work or not. So I want to put in all capital purchases. But then I also, if I'm going to put in non-farm income, I got to put in all the non-farm expenses. So I'm going to put in my living expenses, the things that I spend money on that are considered my living items, okay? So groceries and going out to eat and all the different things that I might spend living money on that have nothing to do with the farm itself. I want to budget for those, okay? I also want to show whatever I'm expecting to have to pay in income taxes, because especially if it's a fairly substantial amount, I want to make sure that I can cover that with my cash. And then finally, now I can include my principal payments that I pay on my debt. So remember before, when we did an income statement, we didn't include principal payments because they were a repayment, not a cost for borrowing money. So we included interest, but not principal. Well, now principal takes cash. I have to pay that check. And so I'm going to include that principal payment on my cash flow so that I can show how much I have in principal payments. So from a simplified standpoint, this is what a simplified cash flow budget might look like.